Hello and welcome back to Bunnex Investment Group. And if you're new, consider subscribing so that you won't miss any of our new videos as we upload. In this particular video, we are going to be talking about a very simple trading strategy that utilizes the Traders Dynamic Index. So just a small definition of the TDI, it's basically the only indicator that can show us market volatility as well as market sentiment. So the TDI is basically a combination of several indicators from the common ones on our platforms. The one in green is the RSI line, which is basically meant to read the relative strength index, the relative strength actually of a particular currency. Then the one in blue, actually two in blue, are the volatility bands derived from the Bollinger Bands. So these are meant to measure the upper and the lower volatility, giving us a sense of oversold and overbought scenarios. Then the one in red is the signal line, which is there to actually offer us points where we can confirm return of the relative strength index inside the Bollinger Bands. Then the one in yellow is the moving 50, or basically the baseline. So the baseline is there to actually issue us a trend of the price chart. In this case, if we see it sloping downwards, it will be showing us downward trend, and if it's sloping upwards, it's basically an upwards trend. So basically, to trade with this particular strategy, we need a few parameters. The first parameter that we need to see is basically obtained on the H4 time frame. So on the H4 time frame, we need to see the market going out of the bands. For instance, we are saying the relative strength index should break out of the bands like this. So this actually shows us that there is now a higher probability of the market reversing on the lower time frames. So we'll be interested when we see the market actually getting back into the volatility bands. So in this case, we'll have the upper and lower lines or horizontal lines, the upper one at 68 and the lower one at 32. So it will be best for us to consider the breakouts of the relative strength outside the volatility bands at the 68 and at the 32. So that is another point whereby we've seen the RSI going out of the bands on the H4 time frame. Then another point is this one. The RSI went outside the bands at the 68 line. Then another point, another point, another point here, and left one, this one out. So after having these points, these are basically for back testing, but in actual fact will be actually in real market. So like in this case, if we see the market going out of the bands and getting back into the bands, it will be a valid TDI breakout. So after having these points, we now need to find a W or an M pattern on the price chart. So just to summarize everything that I have talked about earlier, we actually wait for the market to go out of the bands on the H4 time frame. On that H4 time frame, we need to see the market actually showing us return within the bands. Then on the H1 time frame, whilst that is happening, we need to see an M or a W. So going on the H1 time frame, this is the first point that we marked on the H4 time frame, and in that case an M was actually issued, which is this one. We had an M, therefore our trade was going to be done on the second leg of that M. Then going forth on the other point that we marked on the H4, which is this one, we actually got a W, which was also tradable. First leg and second leg. going forth, at this point we obtained a breakout of the TDI on the H4. Unfortunately, on the H1 the M was not issued there and there, so the second leg was later issued later. But in our case, we could not predict that this was going to happen, whereby we were going to have 1, 2, 3, 4 days to have the second leg. So probably this was going to be a skip. Then this was another point. In this case, we have this particular type of an M, whereby the first leg was actually higher than the second leg, and on the TDI it was inverse. Therefore, we call this effect divergence. In this case, it's actually called convergence, whereby what is happening on the price chart is different to what is happening on the TDI. And at this point, we actually obtained this point on the H4, but we could not enter because there was no a proper setup. And at this point, it was also another point that we've marked on the TDI, and a setup was also issued, which is basically a W pattern. And at this point, we marked it on the TDI, a pattern was also issued. Then right now this was the last point that we marked on the H4 time frame. Unfortunately, we were not issued a proper pattern to enter or to go short from this zone. So basically, try to look for an H4 breakout and then find a pattern on the H1 time frame, which is a proper W or a proper M. On that note, we come to the end of this video. Thank you for watching. Like and subscribe.